time frame for you to really be able to judge whether it's done good or bad. I think these are just market cycles, and he should continue.
Market cycles, and that is what you should consider with your investments. Let's go to the next one, and this is a fund almost everyone talks about. Nirav, let me come to you for this. Shivam is writing to us from New Delhi. He says, given the market environment, does Parag Parikh Flexi Cap Fund is it still relevant in the current market scenario? There's been so much debate, right, how this fund has not performed in the last 1.5 years, when it was actually, in fact, the darling of investors at a point in time. Do you think the investment should continue, or fresh investment should be made in this fund?
So there are a few nuances about the fund, right? The fund is typically a large cap fund for all essential purposes. And, it has quite a large allocation of its overall portfolio concentrated in the top set of holdings, the top 10, 12 holdings. Even within that, there is a large composition of financial services, banks, and IT services. Now, when you look at it this way, you realize that whether it be on the market cap side, where it is large caps, or on the sectoral side, talking about banks, financial services, and IT services, all of these segments have been on the unfavorable side of the market over the past year and a half. And now add to that the collective weight that is assigned to these segments, which is really high. Almost half of the portfolio is concentrated around the top 10, 12 such holdings. It is only mathematically conclusive that the fund had to go through a very, very rough patch. Of course, they've shared quite a history of being able to navigate market cycles effectively. But another thing also, now only time will say whether it was a smart move or not. But there is a peculiarly high level of cash holdings also that could be a potential drag on future performance. Now, one thing that we distinctly notice that while they have a FlexiCap fund and an ELSS fund, the cash holding is not so high in the ELSS fund. So this leads to the question whether this is a part of a strategy, a choice, or a design constraint as the fund size is increasing and they are unwilling to go below in the market cap segment. So having said that, there is a slight offsetting effect, probably one of the very few funds giving exposure of in the ballpark of 10 to 15% towards US big tech stocks, which could offset quite some drag over there. So net, the performance remains a wait and watch. One thing that its fortune is very quick, very strongly tied to is a turn in the entire market regime. It needs to break out of the sideways curse that it is going through, and probably some bit of, if there were reversals, especially from the FII front into the same segment, this fund could really stand ahead of the others. So right now it is wait and watch, not really a bad one outright, but not as enthusiastic as we used to be.
And Kirtan, I know you started the show and we had that FlexiCap query where you mentioned Parag Parikh FlexiCap as well. So you still think it's relevant, right? Or you would say the other name you'd given was White Oak FlexiCap as well?
No, I think PPFAS is a buy for us. I think it's very unfortunate that the investor community, just because of the last 1 year performance, is not very willing to look forward to the fund that has been so consistent since the time it was launched. Also, I think the bigger problem is that people don't really understand the style of the investing of the fund manager and just looks at the returns and invest. I think the fund manager has been very categorical and very clear since the inception of the fund that they are a value style fund, and hence all the investments that they've done is only looking at the valuations and not got carried away in general by how the market momentum has played out. And also taking cash calls is actually an inherent part of how the fund has been managed. So I think if these strategies have worked for the fund in the past, I don't see a reason why this should be the reason for you to exit. And 1 year is too small a performance, I think, for anybody to be able to judge.
Take that point. The debate on PPFAS continues. It's all over social media as well. But take your point, gentlemen. The fund breakup and their cash level understanding is very important before you make any investment decisions as well. We'll slip into a short break. On the other side, we'll continue to answer all our queries, all your queries with our guests. Stay tuned.
You run the show, but if and when you decide to step away, the show must go on. Ambit First, Family Office, for India's first families.
The best investment one can make in life is finding the right life partner. That's why we created VIPshadi.com. Register now.
When the dream of starting a business becomes a reality and promising ideas receive the right support, innovation turns into opportunity. Over the past 12 years, sustained efforts by the central government through the Startup India initiative have helped create more than 23 lakh jobs through over 2 lakh startups. As a result, India has emerged as a growing powerhouse of innovation.
With the help of Startup India scheme, we have been able to get the required funds for initial prototype development, the initial team that we needed to assemble to build the product, and working space via incubators.
With women serving as directors in 48% of these startups.
I am very happy to have the opportunity to work with my family in my own district.
12 years dedicated to service, building the foundation of a Vikasit Bharat.
Oh, hello.
इन्वेस्टिंग के लिए इंटेलिजेंट बनना है तो विटामिन B1, B6, B9, B12.
Oh, hello. इन्वेस्टिंग के लिए तेरा ऐप इंटेलिजेंट होना चाहिए. ट्रेडिंग सिग्नल, स्मार्ट डिस्कवरी, सिक्योर एग्जिट, आस्क एंजल.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
There are some shades within us that only these walls see. To let you safely live all your colors, we have added advanced defense to all of ours. Live your colors safely. JSW Paints.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने.
Money, 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 money every month.
सोच बदलो और बैंक भी.
Out you come.
With the shortage of brand new aircraft delivery across the world, Emirates decided to go it alone and refurbish over 200 of our existing planes at our own engineering facility. This makes it the largest retrofit program on the planet. For our customers, it means even greater consistency of a world-class product.
Welcome back. You're still tuned into MF Corner. We still have with us Kirtan Shah of Truvanta Wealth and Niravar Karkera of W by Grow. And we are answering all your individual mutual fund queries. Nirav, let me start with you this time. Ranjit Reddy is writing to us from Chennai. He wants to know mutual funds focused on energy and power sectors. We do have some options here. This is, of course, a sectoral theme that the viewer is looking at. What are your suggestions here?
I feel the most effective way to invest in these themes are through ETFs. There are two ETFs that exactly target these segments. So you have the Motilal Oswal Energy Index ETF, which tracks the energy index. It is a broader composition of gas, petroleum, and power theme. And Grow BSE Power ETF tracks the power ETF by BSE. This is very focused on heavy electricals, power transmission, power generation units. I feel these two are good starting points for anyone looking to invest in these plays.
Point taken there. A couple of names there. Looking to invest in this place, then you can look at these names. Let's move on to the next query. We have Himanshu Ray, who's writing to us from Kolkata. He asks if investing in alpha and momentum funds at the same time would be a good investment decision. Kirtan, your suggestion?
See, I think both of these themes typically end up following what stocks have done well in the past, and that's the kind of allocation that they want to give for future. While they are slightly different from each other, but more or less they will have a lot of overlap in my opinion. And hence, while you are trying to do too smart beta, I would rather suggest that you select between an alpha or a momentum and then add a value theme to it. So I would be somebody who would do probably a momentum and a value, then probably do an alpha or a momentum together.
Okay, all right. Take that point. The next question is, there's a lot of flexi-cap actually on the show today. So the next query is coming in from Raman Jain, writing to us from New Delhi. He asked, out of multi-cap funds or flexi-cap funds, which category would be suitable for investment purposes? For a 30-year-old, he asked whether he can remain invested for the next 30 years. And additionally, something on similar lines, Kshitij Kumar is writing to us from Pune. He asked whether multi-cap asset funds or flexi-cap category, which would always be the winner between the two in the mutual fund space. Your take, Nirav.
So one thing is that the flexi-cap fund definitely has more freedom and it can operate as a multi-cap fund whenever it wishes to. But unfortunately, the reality of life is very different. Most flexi-cap funds have tilted towards being a large cap fund. So the bottom line is not really whether a flexi cap fund is better than a multi cap fund, but whether the fund manager, given the size and the style of the portfolio, is able to generate alpha sustainably. So although a flexi cap fund may be large cap tilted, if the fund manager is good in identifying opportunities on the large cap side and allocate and size his way into generating alpha, I feel that becomes a better option. And on the multi cap side, it becomes a much viable option if the fund management has a credible track record of generating ideas on the mid and small cap that is able to generate that alpha kicker through pure bottom up stock picking. So it's not a category choice, it's a fund choice, and the category becomes largely incidental. So for those investing for the longer term and who want to have an absolute minimum allocation towards mid cap and small cap 25% each, multi cap is the way to go forward, but you need to be sure that the fund manager is also confident of generating opportunities in the mid and small cap segment.
Point taken there. And Kirtan, your suggestion, multi-cap versus flexi-cap, that's the query coming in from two of the viewers. So what would you suggest and propose to investors?
I think I would completely agree with him saying that it is more on the scheme and the fund manager than the category. But let's say if I still have to answer the category question, I think for a long-term investor who has the risk appetite to be able to maneuver around the volatility that might come across when you do mid-cap and small-cap investing, I think multi-cap hopefully can end up doing a better job because multi-cap as a category has a compulsion to invest 25% in mid and 25% in small, which will make sure that 50% of your portfolio largely is in mid and small at all given point in time. And like rightly pointed out by Nirav, I think in the flexi-cap category, if you look at the average of all the flexi-cap funds that are currently available, most of them have close to 70% in large cap. So flexi-cap in India for 2018. So I think it is more to do with risk appetite and being able to digest the volatility. The investor really has to understand that multi-cap will have at least 50% small and mid, and the large cap will largely have a smaller bit to mid and small. So I think this is the distinct understanding that the investor needs to have before they make a judgment.
Thank you so much, Nirav and Kirtan, for joining us today. It's always a pleasure to have both of you on the show, and always good to address all the individual queries which are sent by the viewers as well. And with that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.
Presented by Bandhan Mutual Fund. Co-powered by SBI, the banker to every Indian, truly. And BSC, the power of vibrance.
Digital arrest, take part. Hey, warranted. You are under digital arrest.
Cut. Vigilante? Oh, vigilante. ये है असली arrest. Digital arrest is 100% fake. It doesn't exist. Pause. Don't act. ऐसे और भी फ्रॉड्स की जानकारी के लिए विजिलेंटी को फॉलो करें।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
ब्रो, इन्वेस्टिंग के लिए इंटेलिजेंट बनना है तो
स्टॉक ट्यूटोरियल्स, मार्केट ट्रेनिंग, इन्फ्लुएंसर एडवाइस, एजुकेशनल वीडियोस।
ब्रो, इन्वेस्टिंग के लिए तेरा ऐप इंटेलिजेंट होना चाहिए। ट्रेडिंग सिग्नल, स्मार्ट डिस्कवरी, सिक्योर एग्जिट, आस्क एंजल।
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Giving new momentum to indigenous technology, Vande Bharat, equipped with modern amenities, enhanced safety features, comfortable seating, clean and modern coaches, and high-speed performance.
It is offering passengers a new travel experience. This is the train of a new India, an India that moves fast, surges ahead with confidence, and writes a new chapter every day. Today, the number of Vande Bharat trains has crossed 164, connecting 274 districts and making the journeys of crores of passengers more comfortable, convenient, and memorable.
It has been a great experience. Whenever I travel for my SSB, I use the Vande Bharat Express.
There is a strong focus on cleanliness, and the catering service is excellent.
12 years dedicated to service, building the foundation of a Vikasit Bharat.
Look, this famous guy is giving me investment tips.
Sure, it's only for you.
Oh. Pay attention. From afar, it felt so true. A famous face giving advice with a smile. But looking closer, I saw I was being trapped by a fake video slide.
Well said, well said.
SEBI and NSE advise, in any video, focus on slow eyelashes and faulty lip sync. Believe and trust only on authorized sources. Wah!
सोच कर, समझ कर, इन्वेस्ट कर.
NSE द्वारा निवेशकों के हित में जारी.
Co-powered by SBI, the banker to every Indian, truly.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBCTV18 Motilal Oswal studio.
Today, Taiwan Index opened up with gains. Hang Seng is opened up with cuts.
It's signed, the deal's all signed, and the Strait is already partially open.
Oil's at about 83, so there's not very much incremental change compared to where we were.
It'll open up a completely new chapter of opportunities for us as a company.
HCL Tech on one end, it's doing well, Bajaj Finance, SBI Life, Tata Consumer, etc. And you got about 10 names which are lower.
Whenever the deficit grows bigger, it becomes difficult to catch up at a later date. That is the worry.
Government has launched OFS to sell up to 5% stake to raise almost 3,100 crore.
We are still at the highest point of the day though, and today being the weekly expiry of the Nifty contracts, it's either this way or that.
Aluminium prices are around $3,000 per ton to around $3,200 per ton over the next 2 years.
Exports have hit an all-time monthly high of $45.2 billion. That's a big positive considering that there were tariff worries.
We are up around 109 points in the Nifty. Very close again to the 24,000 mark, which we have been resisting. Mid-caps in the green, and so is the Bank Nifty. So that's where the recovery is coming from. Qatar has set to restore half of LNG output a month after Strait of Hormuz opens. And that's an important update coming in from Petronet LNG.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBCTV18 Motilal Oswal studio. I'm Nigel, and I'm going to be a host for the remainder of the show today. Final 60 minutes ago. It's not too bad a day. In fact, it's good because it's the third straight session where we're seeing a century on the Nifty. You'd like that. And as we speak, we're at the high point of the day. Well, you've tuned into the final hour of trade on Closing Bell. Let's tell you what we have lined up for you first on the show. The Nifty has hit the 24,000 odd mark. The markets spoke up in the last hour of trade. Broader markets, they slightly underperform. IT, FMCG and Realty, well, they lead the gains. While metal stocks, Nalco, Hindalco and Vedanta, they're under pressure as aluminium prices have cooled off. We'll do a deep dive into the aluminium pricing story. Will come up in just a bit. Tata Consumer as well has perked up on the back of a bullish note coming in from Citi. Mangalam will be joining in to tell us the rationale of that particular note. And in a key development for the gas space, Qatar says that the LNG output recovery could be swift once the Strait of Hormuz does reopen. With India heavily reliant on a Qatari LNG, the update is positive actually for companies like Petronet LNG. Pressure persists though on Pine Labs as the company refutes media reports and downplays any potential RBI-related impact on its profitability. Okay, what do you do then? You've seen 23,300 and now you're seeing around 24,000. All of this in a matter of 3 sessions. Should you be booking some gains or should you be riding for bigger gains? Well, Mitesh Thakkar joins us to help us out with his stake. Mitesh, what do you make of today's move on the Nifty first? You could tell us whether the IT index is going through a bit of consolidation. Not the IT index. Let's talk about the Nifty Bank actually, because that's underperformed after a few sessions. And would you be more bullish on the Nifty Bank in comparison to the Nifty?
Good afternoon, Nigel. See, I think we have been more bullish on the Nifty Bank, but today it is the Nifty which is kind of trying to play catch up. Now, between the two, the pattern of the Bank Nifty still remains stronger, but the Nifty also, given the fact that the Bank Nifty itself is about 40% weightage in the Nifty is also getting some kind of leg up, and Nifty now is very close to the highs of 24,031, which 24,050, which we recorded on the 25th of May. So I think that's one target which I had, and then I suggested once we cross that, we have a good chance of heading towards 24,350, 400 zones, and maybe even higher. But that's the near-term target. So stay positive on both the indices. But between the two, I still prefer from a positional trading point of view, I still prefer the financial names. But as of now, I think both the indices are looking good. Right now, I have a buy call on TVS Motors with a stop at about 34.10 for targets of 35.35, and Titan is a buy as well. Titan, I would recommend keeping a stop just below the day's low of 42.83, so keep at about 42.80, and look for a target of roughly around 44.50.
What could be the big swing factor, Mitesh? You recall when you had, Sehwag, Ganguly, and then you had Sachin as well. What's been happening is that the Nifty Bank, the Tech Index and Reliance, they have not been able to party together. But every now and then there is a bit of a relationship and a partnership that they get into. And for today's trading session, the Tech Index and Reliance Industries has found its form. Remember, Reliance Industries corrected 8% in the last 1 month. What are the charts indicating on Reliance Industries? Because that's like an index by itself. We have a big event that's coming up later this week itself. What is your view? I've noticed numerous times it goes to 1,250, 1,280, and then it sees good amount of buying. At 1330, how's it looking?
Same that I have some positions over here. I think Reliance is just giving the first signs of reversals. Getting past 13.10.20 was the trigger, and the near-term target should be around 13.55. And once we start crossing that, then I think Reliance might turn even more positive, and I would look at possibly targets of around 1,405 to about 1,410.
Okay, all right. Just one more stock, Nalco. If you could look at it on the charts, aluminium prices have corrected and alumina prices have been weak as it is. Nalco, a stock that was at around 440 bucks, that corrected to around 355 rupees earlier today. Seen a bit of a bounce from the lows, but how's it looking on the charts, Mitesh, if you could help us out? The structure, if you would just pull up the last 1 week, you'll see what I'm talking about. Aluminium prices came off and that's why the stock has come off. But I'll tell you what, fundamentally, aluminium prices may not breach that $3,000, $3,100 per ton because of the short supply we have seen in the global markets. On the charts, how's it looking?
So Nalco has been weak. Again, disclaimer that today morning I booked some profits on the short side. We had some put spread actually on Nalco. See, the weekly charts, after a long time, and if you look at the chart from July, August 25, the stock has been in a one-way uptrend. And now I think there's first signs of that profit booking emerging on the chart. So one, I think the first time, the weekly closing below that, some more correction could still play out, and I would, even look at a target of around 335, 330. So from 150 to about 440, I think retracement to about 330, 340 looks very likely over here.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's do a quick check then on the F&O markets. The reason I say that is because we have the weekly expiry that will play out. And as we were pointing out earlier, the Nifty Bank has gone through a phase of consolidation today, which is pretty much par for the course after the kind of run that we've seen. The Nifty is still up close to around 0.5%. What's powering us ahead is the IT index as well as Reliance Industries. And for me, Reliance Industries holds the key from here on if we need to go past the 24,400 odd mark. So Reliance Industries will have to perform. And for today's trading session, it's holding one end up. We should pull up the intraday chart on Reliance Industries. Moving to the options data. 23,950 put. Now the premium has come down to around $5. At the start of today, it was $130. So there is aggressive writing that we're seeing at that particular strike. Now down to around 7 rupees. So aggressive writing out there. These bulls, they'll be expecting 23,800 mark to actually hold out. So that's why that's the kind of writing, and I don't think that'll get breached on the downside. On the upside, it's interesting because you've got the direction right? The markets have moved up, you've bought a call. If you bought a call, the 24,300 call, ideally the premium will move up. But the reason that we're seeing that the premium has moved down is because the time value of money is getting eroded and there is writing being seen at that particular level. So the premium has come down to around 15 bucks from around 40 rupees. That's what the options data is telling you. So you're just plugging that in. The premium on the 24,000 call was around 50 bucks. So those bears, they are expecting the 24,050 mark to actually hold out on the upside. That's the resistance mark. Support comes in at around 23,900 or thereabouts. In terms of stock futures, Suzlon has come in for a bout of short covering. So that's, the stock that should come up on the screen. The stock is higher while you have the open interest lower. We'll also pull up, Bandhan Bank, because that one, after a phase of consolidation, that one's actually coming out of that. It was going to around 180, 190 rupees. There is some signs of buying on that one, both in the cash market as well as in the FNO market. We'll keep an eye out on that one. You have Inox Wind as well that's coming for a bout of short covering. And EMS players, they are back in the game today. And we're seeing good amount of long build-up on a stock like PG Electroplast. So short point being, just for the next 60 minutes, 24,050 is going to be a bit of a resistance. If we can get past that and we can trade about that, I'll tell you what, we could also see 24,150 today. So just keep an eye on that mark, 24,050. That's the line in the sand for the bears. They'll want to protect that level. But the good news for me is I'm not alone in the studio right now. Ekta Batra has joined me. Hey, Ekta, good to have you on the show. Markets holding up. I mean, I think sentiment has turned for the better, which is good news.
Hi, Nigel. Yes, absolutely. We are inching closer towards that 24,000 mark. Let's see whether we manage to sustain. But what would probably be more interesting is what exactly the FIIs do in today's trading session. We did have that little flash in the pan, 200 crores in terms of an FII net buy figure. So let's see whether we can build on that. But nonetheless, for the mid caps as well, holding up well. So up around 0.3% currently for the mid cap index and the advanced decline ratio. So that's a key parameter, which is in fact incrementally improved as the trading session has gone on. So around 2,300 odd stocks advancing to around 2,072 odd stocks declining on the Bombay Stock Exchange. As you can see, that crisscross and that little bit of a gap being maintained at this point.
Indeed. Let's get in Dharmesh Khan, then Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. It seems the markets seem to be getting their mojo back, because crude oil prices are just sliding down. We have some various news reports that are coming in then, but crude is headed one way. That appears down. It looks like it's going to breach the $80 per barrel mark. Given this sort of a backdrop, what do you like? Let's talk about the banking space first. Bank of India is something that you've liked. Any view on Bandhan Bank? There's going to be a change of regime in West Bengal. There's already a change out there. And this hope is that growth will be far better. A lot of companies with exposure out there could fare better as well. Bandhan Bank, a rank underperformer. You'll be interested, 215 bucks?
Yeah, good afternoon, Nigel. Thanks for having me on your show. We have been constructive on the entire BFSI space, which includes NBFC as well as banks for a while. And we have, in the public sector banking space, we have liked Bank of India. Earlier, we have booked profit, but again, we have reinitiated on that a buy recommendation. At the same time, I think this space is in for a good pay because credit growth so far till the month of May has been very strong, 15-16% kind of a credit growth we are seeing. And expectation is that NIMs will improve because cost of deposits are likely to come down. 5-10 basis point kind of improvement is likely to be there. Net interest income growth is what we are looking into, and there I think a strong traction can be there. This time around 100-150 basis point of our net interest income growth will translate to over 10% kind of a profitability growth. So that is the entire metrics on which we are working. Treasury income again will benefit because bond rates have come down. So everything is playing in their favor. The expectation that interest rate will, RBI may hike interest rate. We don't buy that because the way, the crude prices are correcting, and given the fact that if the status quo is prevailed, then crude prices should actually trade below the levels when the war started. The reason being the consumption has come down. 2 million barrels per day global consumption of crude oil has come down. It's likely to be so. What we are liking, you should go with the winners. And there I think Axis Bank stands a strong chance, along with IndusInd Bank, which is again the same story like Bandhan Bank is again coming back, gaining exposure. But Bandhan Bank, the only caveat, Nigel, which I have as of now is Monsoons are playing a bit of a dicey play. And the area in which Bandhan Bank operates, basically Odisha and Bengal, is very suspect to that. Earlier also, where you have seen either, be it flooding or drought has led to a problem out there. It's a microfinance company which has translated into a bank. So be careful if you are going into Bandhan Bank. Risk reward issue is definitely favorable. Having regard to how the macros are playing, I would still prefer, Axis Bank or IndusInd Bank and Bank of India.
Okay, all right. Well, those are a couple of views coming in there. But the big story definitely has to be what's taking place with aluminium stocks. Nalco, Hindalco, Vedanta, all of them are under pressure today. This is because prices, of course, have hit the lowest in over 2 months. Nigel, they're down around, what, 8 to 10% from the peak?
Well, that's right, Ekta. The easing of the geopolitical tensions actually following that US-Iran peace deal, that's leading to the markets reprice the war premium that it had bid up in terms of aluminium prices as well. And aluminium prices, well, they have corrected nearly around 10% from the recent high. Remember, prior to that, they touched the highest level we saw in 4 years. That was at the end of May when it went to around $3,850 per ton. Now, remember, the rally was driven by various concerns over the potential supply disruptions in the Middle East. We must note that even post the recent correction, after prices have corrected from around $3,850 per ton to around $3,350 per ton, prices are still higher than what estimates, the analysts are factoring in, because they are in the vicinity of around $3,000 to around $3,200 on a per ton basis for the next 2 years or so. But why does the street believe that prices actually could get supported even after this 10% correction? Let me explain. First, the GCC countries as well as Iran put it together, they account for around 7 million tons of aluminium smelting capacity. And parts of this capacity, they were impacted during the US-Iran conflict. And restarting of these facilities could take as long as 9 months. So limited point is immediate supply response could be delayed. Second point is you'll say China will supply. But China, which is the world's largest producer of aluminium, they have a production cap of 45 million tons. And they're already at around 97% in terms of utilization levels, which means there is very limited room for China to come and flood the market. Point number 3 is there are various long-term drivers, right? We talk about AI, we talk about data centers, grid expansion, renewable energy, as well as broader energy transition projects. All of them could actually be a tailwind for aluminium consumption as well globally. So the bottom line is the geopolitical risk premium is fading. The broader supply-demand imbalance, that suggests that aluminium prices could remain higher because the market could be in a bit of a deficit, which could provide some kind of support at lower levels to aluminium LME prices, which are down to around $3,380 per ton. Dharmesh, what do you think? Nalco at 440, everyone was interested. It's at around 355 today. There is seen a bit of a bounce from the lows. Hindalco as well, I think it was 1120, 1130 a few sessions ago. It's at around 980. And Vedanta, that actually had a blockbuster listing at 525. One was wondering whether you should be wait for better times or not. I think those that played that particular event, they just took money off the table. Yesterday it was down 5%, today it's down another 5%. But valuations as well, it seemed to have run ahead of himself. Would you be looking to buy any of these aluminium-related plays? Because the aluminium cycle could actually continue for close to around a year, 18 months at least.
Yeah, absolutely, Nigel. I buy all the points which has been put forward by you. I mean, all those points are truly valid points. And the speculative froth which was there in the aluminium pricing because of the Middle East crisis is now on the unwinding phase. It may correct even more. I mean, 5-7% kind of a correction cannot be ruled out when the unwinding of trades take place. So that is likely there. But aluminium, demand on the ground has seen a structural shift. If you look at a 20 years CAGR on the demand side, it was around 3.5 to 4% on the volume side, which has gone up to 5.5 to 6%. And going by the various managements like Hindustan Zinc and all, they are doubling their capacity in next 3 to 4 year time frame. So I think this structural story on the aluminium is likely to play out. A commodity by its nature is very wild in its behavior as far as metal prices are concerned, or the stock prices are concerned. So this is an opportunity to have a staggered buying approach. The best way to play the metal space is keep on buying the declines. Every 5% decline you add more. I don't think more than 10% kind of a decline can be warranted on the stocks. And one more year of actual structural play is there. So Hindalco, Vedanta, or Hindustan Zinc, Nalco all will retrace their highs which was made last few months. So we are betting on this trading play still on the metal space.
Okay, all right. Well, you're still betting on the metal space for now. We have Hindalco, which is under pressure. In fact, it's the top loser on the Nifty, down around 3.2%. But let's talk about a couple of stocks which are, in fact, bucking the trend at this point. Tata Consumer is a buzz today. This is on the back of a bullish Citi note. Manglam is here to tell us more about that. Manglam, over to you.
Well, the management met a couple of analysts yesterday, and we've got a note that came in from Citi. They're bullish on this stock. They have a target price of 1,450 rupees per share because, the takeaways were basically demand remains fairly resilient with no visible slowdown so far as against what was feared right now. Their growth outlook for at least, Sampan, the ready-to-drink Narishko business, which will do well because of delayed monsoons. Organic India and Capital Foods should do well for them. Commodity costs, as per the company, remains benign in the very near term. And they're on the right side of the commodity cost, curve. Because despite inflation that we're seeing in all other parts of the business, their key products are seeing actually prices come off, most notably in tea itself. So those are positive for them. Pricing actions, they say, remain calibrated with no broad-based price hikes that the company has taken. So as a result of which they stand to benefit, and margin expansion pretty much remains on the card. So the company expects about 50 to 80 basis points in terms of EBITDA margin improvement in FY27, with the long-term EBITDA margin target remaining unchanged at 17% as well. And add to all of this, they are also increasing their distribution as well as innovation pipeline, with structural drivers for margin expansion, which include the likes of premiumization, all of them doing well for the stock. And that explains why it's doing well in today's trading session after having underperformed for a while.
Dharmesh, have you looked at Tata Consumer? Is that a stock that you like?
Yeah, I mean, on the FMCG space, particular staple side, we don't like any of the names, primarily because the valuations are high, and we do think that consumption eventually will take a hit. I mean, inflation is going to take a hit. Tata Consumer remains fairly isolated from the factors because it's more of a urban and semi-urban kind of a play. So their divisions as of now is doing well. It's likely to do well going forward. But again, look at the valuation multiples at which it's trading. 70 plus kind of a P multiple on a trailing basis. And if you built in 15 to 17% kind of a growth rate or even 20%, it comes to 45, 50 times 1 year forward earning multiple. So that I think will be in for resetting going forward. So, I mean, the entire be it Tata Consumer or HUS, Davos of the world, we have not been recommending them as a buy trade.
Okay, all right. But the sector of the day, Dharmesh, has been tech. You have been extremely bullish on Orient Pro, and the stock actually has been a relative underperformer. But last few days, it seems that the tech stocks are getting their act together, and this one has bounced considerably as well. As you mentioned, I think it's a more products related play. You like that, or now you would choose to look at some of the frontline names?
Nigel, we are still, stock specific in our bottoms up approach as far as tech space is concerned, and the two stocks which we have liked earlier, when it's not relative underperformer, it grossly underperformed the markets. I mean, Orient Pro and Tata Technologies both corrected big time. But now they are both on the recovery phase. Tata Technologies, the business is back into the line effect. I think going forward, they will do fairly well. Orient Pro recently had an investor meet. I was there in the meeting, and the pipeline and the business details which they are throwing out for the next 4 years all seems to be in place. The AI vertical is doing a fab job along with multiple scope of data center opportunities going forward in the future. So I think all this takes, be it mobility or banking transaction suite or the data center architectural stake, is doing fairly well. It's very relatively cheap. We are penciling around 380 to 400 crores of profit FY28. Based on that, it's available quite cheap, around say 12-13 times FY28 earnings multiple. 20% kind of a margin, what management reiterated, they will hold on to that. And again, the revenue run rate growth will come back to say 25 to 26% going forward. So we buy that. We have been recommending that we are buying. But as far as large cap IT stocks are concerned, I think it's more of a trading play, which is playing out based on the various permutation combination. We are still, holding our horses on the large cap IT stocks, watching it from the sidelines.
Okay, so you're not interested in HCL Tech today and the move that they've made?
Not really. I mean, that's a very small investment they have made, and it's good. Like being an Indian, it's a proud moment. I mean, Sarvam, if it does well, it's good. But I mean, what's the top line of Sarvam? I think 45 crores is what they did last year. So plenty of things to be done. And going by the management own confirmation, the MD said that we are late, but we have started. In AI world, every week you are having a new version. So a lot of catch up to do. What I think eventually how the large cap IT space will end up with is they will be filling in the gaps. They may still have some growth, 2-3%. And most of the reports which I have seen by any brokers, they are targeting the price target as the last highs. I mean, 20-25% kind of target price they are giving to all the companies. It's not a structural buy story which they have been recommending. It's a valuation gap strategy which they are recommending to play out, which may still play out. I don't deny that, but structurally, I think a lot of changes are still due in the AI-related IT space.
Okay, all right, fair enough. So HCL Tech did that deal today. That stock is up around 3%, one of the top gainers on the Nifty. But the other stock which has been in focus is Petnet LNG, where Qatar is looking to revive LNG output, which would be a positive for India as well as stocks such as that. Sonal's here to tell us more.
Well, yes, there is a Bloomberg report which suggests that Qatar has indicated they will be restoring half of the LNG output a month after Strait of Hormuz opens. There was some infrastructure damage that happened during the strikes, and they say they will restore 80% of LNG production within 2 months itself. Now, do remember Qatar Energy, which is one of the companies, they're big producers of gas, had announced force majeure during the war, and India has around 45% of its gas imports coming in from Qatar itself. The total imports in India is 50% of the consumption that we have totally, out of which 45% itself comes in from Qatar. Petnet LNG is one of the companies which imports that LNG, regasifies it, and then transports it within the country. They had indicated that they have an agreement with Qatar Energy for supply of 7.5 million tons per annum. They had also told us that the company has engaged 3 dedicated vessels under long-term agreement which issued force majeure, and that's the reason they did not get their contracted supplies. So if we talk about the stock moves as well, there was a sharp decline post the West Asia war because the stock made a high of 326.4 just before the war, and the low was on March 23rd at 235.35. There has been substantial recovery from those levels on the stock as well. Let's talk about the gas economy in general, because we did not get enough supplies from Qatar. We did diversify quite a bit. India's imports from US sharply increased post the war, 6 times, up 6 times in May itself. We saw supplies from Oman, Nigeria, Angola. These were the diversification that we saw in the month of May. India is also paying spot-linked premiums to secure the supply. Yes, prices have increased from West Asia war. They are still up 80% from pre-West Asia war levels. So yes, gas prices are higher, but some of these long-term contracts could come in at the same price. Supply was the problem. Now looks like it could get restored, which would mean better volumes for Petnet LNG.
Got it. All right. Thanks a lot, Sonal, for educating us on that. Dharmesh, you want to come in on this? Either this name, Petnet LNG, because bulk of the supplies were coming in via the Strait of Hormuz, and Qatar was a big supplier. Or any of the other gas utility stocks that you like, or maybe the city gas distribution companies. We got choked on the gas front, because most of our supplies are coming from there. Your view?
Definitely a welcome news for all the gas utility players, and this will sort out much of the problem on the volume side. Q1 numbers will still be weak for most of the players in the space. But Petnet LNG, if you look at the numbers, I mean, they are the best value buy among the entire lot. One is it's a pure B2B player. Secondly, I mean, it's available at 10-11 times P multiple. And with a better return ratios, 18-19% kind of an ROE is there. As compared to others, they are at higher P multiple and low return ratios. So I think value buy, definitely it is there. It's a definite trade on the stock price movement. 10-15% kind of upside can be expected going forward into Q2 and Q3. So maybe 5 to 6 months. So our trading buy on the Petnet LNG.
Okay, all right, Dharmesh. Thanks very much for joining in, and we're going to leave it on that note. Thanks very much. Well, that's the view coming in on the markets. Well, for the markets, definitely picked up a lot more in terms of pace. We have the mid-cap index, which is now close to the high point of the day, up around 0.4%, and the Bank Nifty, which is not participating as much, so just about flat with a positive bias, up around 56 odd or 50 odd points currently for the Bank Nifty. We'll take a short break, but up next, we will have Capital Minds MF's Deepak Shenoy talking to us. Stay tuned.
look back at these photos, I remember how far I've come. There wasn't one big moment that changed everything. It was the small ones which I stuck to. Once stood on a scale and saw a scary figure of 99 kgs. That was like a trigger point for me. So I started working out daily, consistently. I think over a year or so, I saw a very good result.
Proud to have completed 3 of the world marathon majors: New York, Berlin, and now London.
Since I started my journey 5 years back, I've finished 20 plus marathons. I've lost a total of 25 kilos, and I can do things which I didn't think were possible a few years ago. Turns out, it's not about intensity, it's about consistency.
Parag's journey reminds us results cannot be seen every day. He built a daily habit and stayed consistent even when progress felt slow. Mutual fund investing works the same way. SIPs are like those daily runs. Small, disciplined investments with consistency, long-term wealth is created.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर. Signature Finest Silver Ilaichi, a premium product from Dilbar Group.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम. AU
सोच बदलो और बैंक भी.
When the dream of starting a business becomes a reality and promising ideas receive the right support, innovation turns into opportunity. Over the past 12 years, sustained efforts by the central government through the Startup India initiative have helped create more than 23 lakh jobs through over 2 lakh startups. As a result, India has emerged as a growing powerhouse of innovation.
With the help of Startup India scheme, we have been able to get the required funds for initial prototype development, the initial team that we needed to assemble to build the product, and working space via incubators.
With women serving as directors in 48% of these startups.
I am very happy to have the opportunity to work with my family in my own district.
12 years dedicated to service, building the foundation of a Vikasit Bharat.
ये हैं कोटक नियो के तेज ट्रेडर.
Nikki index dips then snaps back.
ये ट्रिगर गिरावट का है.
Custom candlesticks की. बेचो और बचो.
ये करते हैं शोर को इग्नोर. और ये हौसला जानकारी और तैयारी से मिलता है. Stay तेज with Kotak Neo. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome back. Well, for the markets, it's holding up steadily. A lot of stocks in focus. So good time then to put the spotlight on the top movers in the market. Hormuz is here to tell us more about that. Hormuz, over to you.
Plenty of stock-specific activity in the broader markets today. And look at Sonata Software, the kind of move that it has had today. Top gainer on the Nifty 500, 19% higher now on the stock. The biggest single-day gain since May of 2014. And that was the time when the stock had surged almost 20%. 27th of May was that date. Volumes today are the highest in over a month. Close to 3 crore shares have been traded on Sonata Software. The 20-day average is only 12.5 lakh shares. So the kind of volumes as well. 15% of those 2.5 crore shares have been marked for delivery. And the stock today has crossed both the 50 and the 100 DMA. And the next level on the upside is the 200-day moving average, which comes at 316.5 for Sonata Software. Of course, the stock is still down over 30% from its 52-week highs, which is well over 450 rupees. Suzlon is another name that has done well today. At one point, the stock was up well over 7%, still holding on to gains of around 4.5%. It's the third straight day of gains today. In this 3-day period, the stock has gained 9%. And the volumes at the highest level in 2 months, over 20 or close to 30 crore shares have been traded. That's 4x its 20-day average, which is around 7 crore shares. And a third of those are marked for delivery today. So, and the 50 DMA, it has crossed on the upside. The next level is the 200-day moving average. And of course, today it's the third most traded stock on the Nifty 500. In fact, the 50-day moving average for Suzlon crossed the 200-day moving average it's the golden cross pattern, as they say it, on the 11th of June. And in fact, it is the third most traded Nifty 500 stock in today's session. And lastly, PG Electroplast, another consumer durable name that's done well today. In fact, the third straight day of gains for this one as well. 15% the stock has gained in the last 3 sessions. Volumes at the highest level in 2 months. Over 1 crore shares have been traded today. Again, 4x, it's a 20-day average, and a quarter of those are marked for delivery. The stock again has crossed its 50-day moving average. The 100 DMA is at 532 on the upside. The 200-day moving average, of course, is at 549. The stock is up 10% so far in the month of June and has recovered everything that it had lost in the previous month.
Okay, all right, Hormuz. Thanks a lot for that. Well, let's welcome Deepak Shenoy, CEO at Capital Mind Mutual Fund, who joins us on the show. Hi, Deepak. Good to have you on the show. Thanks a lot for joining in. Well, I'm looking at the sectors and themes that you've been betting on, and I see there is some non-ferrous in your portfolio. What do you think? That's had a dream run, actually, and it's giving back some part of that. Do you believe that the structural story is still intact, say, for the next 18 to 24 months, particularly on non-ferrous metals like, say, aluminium, copper, as well as in a bit of a deficit? Do you believe this dip is actually a buying opportunity?
Thanks, Nigel. In fact, I think aluminium and copper, of course, we have positions there. There is a reason why the base metals here are, I think, doing a better job at getting, in terms of, they're doing well in the market, is also because, not just because of a contraction of supply or change, a minor change in demand, but the structural change is when companies in general across the world are moving from asset light to an asset heavy kind of a model. Whether it is Google investing in data centers at the large level, India is also investing a bunch in data centers and so on. The war dynamics of in geopolitics have forced companies to increase their own defense expenditures substantially because they feel perhaps that their partners may not be reliable enough to depend on in case of a war, and they don't want to give more business where there are, there are problems in terms of approach in many cases. So more and more companies are saying, listen, we got to do stuff locally. We got to increase capex where otherwise we would normally import from abroad, whether it's a dependence on America or China or any of these large countries. The idea is to increase domestic production of whatever is actually a physical good versus importing it, even if it's a little suboptimal to produce it in your country. It's happening in India as well. We are trying to make in India, even if it's for India itself, even if it's relatively cheaper, to import it from China. We'd say we want to build our own factories, our own equipment, and that is going to increase the demand for both copper and aluminium. And eventually, of course, steel as well, different dynamics there. But I think there is a rise in that as a structural trend. If you look at the next 5 years, we will see the era of capex. In India specifically, there's a lot of capex that is happening that's funded by banks. Look at industrial capex or industrial just borrowings. They've grown at 15% for the first time since 2013 or so. It got dipped all the way to 0%, went negative, and then now it's come back up on the rise of capex. So I think capex worldwide is taking having a return, and it's in physical goods and physical infrastructure and so on. That's where I think these base metals and perhaps the technologically more useful metals like aluminium and copper will probably do a good, have a good run in the next few years. Temporary moves, will happen on a day-to-day basis.
Okay, all right, Deepak, that point is taken. Welcome to the show. In that same theme, would you possibly buy, the older economy stocks, say, for example, from the cement space, the L&Ts of the world?
Well, I think, L&T or in particular or in general, these companies may actually have more businesses than just cement or core infra. There are engineering companies that will benefit from the rise of engineering as a requirement in the growing capex world. But pure cement, I've never liked it as much, primarily because it's valued very richly for what it is, which is a commodity. But, whether it is a moat because you got a limestone mine license, or it's a moat because the suppliers of or manufacturers of cement actually cartelize in India to some extent, and then therefore prices are kind of meaningfully controlled by them. I think the valuations and the risk don't add up quite that much. Though, to be having said that, I think there'll be an initial short-term jump in some of them because of the push to infra. They're not as technologically useful as some of the other things like copper or aluminium, which have more consumable, demand. So that means you consume something, then you demand, your demand comes back because of more of it, and so on. So there, I'd say smaller demand growth will come. That is largely government-led infra plus real estate, which tends to, kind of highlight that part of it. So I'd say it's much further down the line there and not as exciting in terms of valuations.
What about gold, Deepak? All that glitters is gold or not? At the start of this year, the equities were the whooping boys, because there's a lot of pressure on the markets and stocks are falling a lot. Gold only fell 20%. What part of the portfolio should be gold? And I see that you like some of these gold financiers as well. I think you'll have some exposure out there. So help us out.
We do. I think quantitatively speaking, they have done really well. In general, gold financing has gone up quite considerably. If you look at just the banking sector, they've gone from a 30,000 crore kind of lending book 5 years ago to 4,85,000 crores or so, I think, in recent RBI release as of April. And it's probably increased since then, which is just the lending book of banks on gold. The private financiers have another 200,000 crores of lending on gold itself, non-bank, that is. There is also that's a different it's not attractiveness to gold itself, it's attractiveness to the gold financing business, which I think has a layer of cyclicality in the gold prices, but also has very low NPAs in comparison with others because you can liquidate the gold fairly easily. Having said that, there has been a structural demand for gold in the past, but some of that has gone away. We've seen central banks also kind of pare their exposure to gold. Recently, we've seen gold prices come down quite tremendously. I think that was largely because Dubai was, it's a big hub for trading gold. So parts of it, when we were out of commission, there was relatively less trading activity, and supply and demand couldn't meet meaningfully. There were some bumps up and then bumps down as well. However, you look at India's demand was about $72 billion last year. I think the government's trying to curb and control that in as much ways as is possible. But they might actually, I think, there may be a policy reaction to kind of change the way gold is used in India by recirculating it in some form, by creating a monetization scheme of some form. These might help reduce Indian demand. And if we do reduce Indian demand from an import perspective, we will actually affect the price of gold because India is one of the largest importers of gold worldwide. So I would say there's cause for some caution here on gold prices. I don't think last year's rise will be the same as this year's, whatever happens this year. But it may be a useful long-term diversification exercise. It tends to spike at the most crisis layer of moments. So having small part of your portfolio in precious metals in general may be useful for a more multi-asset kind of a framework. Where you don't necessarily care about making alpha in all of the asset classes at the same time, but that some asset class will perform in some times and some asset will perform in other times. So useful as a diversification, useful to wear, but I don't think useful to always generate alpha.
Okay, not useful in terms of generating alpha, but definitely maybe you can look at it as a diversification strategy for your portfolio. Well, on that note, Deepak, we're going to thank you. Thanks very much for joining in and speaking with us. So that's a whole host of stocks that we covered. Well, time now to get to our D Street chatter, where Nimesh is going to get us an insight into the dealing rooms and what they're talking about. Well, he's also going to give us some tidbits about stocks as well. Nimesh, over to you.
That was a strong day for the markets. It's actually a day's high, largely led by the large cap names. So today is not a day for any specific theme. except for the fact that there's a bit of profit booking in the metal names. It's broad-based in terms of the rally in today's market. Technically, 23,950 is a level to watch. It's trading slightly above those levels. If the Nifty manages to close above those levels, you'll probably see further short covering rally. So watch out for that in the days to come. From a flow perspective, it's again a positive way of trade. For the last couple of days, the FIs have turned net buyers and they're covering in the futures market as well. That's the trend in today's market as well. And again, the consistent feedback is that within the financial, it's basically the financials which are well bid again in today's market. So that's one consistent theme. That the FI money is slightly now chasing the large cap financial stocks. Having said that, you're going to expect further supply of paper. So QIPs, blocks, that's a trend which is continuing and might as well continue for the next few days and weeks. So supply of paper, yes, will be there. But I guess a bit of change in terms of FI flows, which has turned positive, and they're chasing some of the large cap financial stocks in the last couple of days.
Let's get to the stocks then, Nimesh. What's on your radar?
So the first is a couple of the financial names, Nigel. The SBI as well as Bajaj Finance both stands out in terms of very strong delivery-based buying for the last couple of days. That's the trend today as well. And I understand one of the leading long-only fund has an active buyer in both those names. So that's from a flow perspective. Second stock is Jana Small Finance Bank. Well, the stock has been consolidating off late. Expect a large block deal in Jana Small Finance Bank very soon. A potential clean-out trade is indication from the private investors in Jana Small Finance Bank. So that's the second name. The third, couple of stocks where you're seeing a bit of buying interest back. Palkrishna Tyres as well as Apollo Tyres. Both have been consolidating because of rising crude prices. Now that the crude has fallen up a bit, you're seeing a bit of accumulation back from domestic mutual funds in the tire names. And the last is Voltam Transformers, a thinly traded stock, but again been active off late, a bit of upside as well in the last couple of days. And for Voltam, there is a buzz that the company is likely to bag a very large order very soon. So that's something to track in Voltam Transformers.
Okay, all right. That used to be a darling. Stock has corrected a fair bit. We'll keep an eye out if that large order does come in. Thanks, Nimesh, for joining in and giving